Hello everyone, welcome to the ichimokujcharts.com daily analysis for the S&P 500 for Tuesday, March the 27th, 2012. Well, a continuation of the trend to the upside today, and the candle that's made a higher high and a higher low, continuing the trend that was established in yesterday's trading. We have a black body, however, to this candle, and the black body denotes the sellers making net bearish progress as opposed to the large amount that the bulls made on the previous day. Yesterday I mentioned that there was a possibility that we wouldn't see follow through because of this extreme type candle, and today that's what we've seen. We've seen the sellers close with control of this market for the trading day by closing the market down at the low, and we see that the buyers lost commitment as they traded up above the high of the previous day, so it does set the market up for a potential change of trend. But the trend is still up. We do have a candle that's made a higher high and a higher low, so the buyers were able to push the market up above that high for the yesterday's trading, but certainly unable to, the sellers were unable to trade the market down below the low or below the 1400 area, and in fact they weren't strong enough to retrace anywhere near to even the mid-range level of the previous large white body candle. In terms of Ichimoku, the market remains bullish in all three time frames: bullish in the long-term time frame by trading above the cloud, medium-term time frame by trading above the Kijun-sen, and the fast-term time frame by trading above the Tenkan-sen, the green line, and the checkout span is above the corresponding price action, confirming the bullishness that we're seeing in all three time frames. In terms of resistance overhead, there isn't a lot of resistance overhead until the market trades up to around 1440. So if we see this trend continue to the upside, we could, over the next week or so, see the market testing 1440. The high of the current candle becomes very important, therefore the high at 1419 becomes very important for continuation of the trend to the upside. So there is a possibility that we could see the market trading higher. If the market does change trend, and there is a possibility of that because the buyers have really lost all of the momentum that they had on the previous day, if we do see the market come off, then there is very substantial support at 1400, the round number, and just above there at the Tenkan-sen at 1403. So a very strong level of support for this market. Below there we do have support down around this swing low around 1387, and then down to the Kijun-sen, which is trading at 1379. So overall a bullish market in all three time frames. The buyers have lost some momentum for today's trading, but not unexpectedly so because of the extreme type candle we had on the previous day. There is a possibility that we could see a change of trend, but the trend is still up, so we do need to watch the high of the current candle for a test to higher levels. Next, moving to gold, and here we see once again a trend that's continuing up, but on a black body candle. The black body on this candle is larger than we saw with the S&P 500, so a little bit of more bearish momentum for today's trading, but we had this extreme candle for the previous day's trading where the bulls were very strongly committed and in control, and it was little wonder in this market also to see the market relax and for some selling to come in. With this candle, the sellers have failed to take out the midway level of the range of the previous candle, and that could be an important area, an important benchmark area for this market over the next trading day or two. But this black body for the trading day suggests that the sellers have closed with strong control of this market, and the buyers lost commitment as they tested up around the 1700 round number, which is what I suggested yesterday. That's a very important level for this market. In terms of Ichimoku, the market's still trading within the cloud, so we have an overall neutral market in big picture terms. Bearish in the medium term time frame by trading below the Kijun-sen, and bullish in the fast term time frame by trading above the Tenkan-sen. The Kijun-sen remains flat, and as that remains flat, there is still a possibility that the market could trade higher and be attracted back towards that flat Kijun-sen, which is trading at 1710. Now, for this market that remains trending up, 1700, as I've said, is very important. If we do see a test up to that level and a bullish test up above, that could mean that we may have higher prices, but we do have very strong resistance overhead above the 1700 level, extending up to the Kijun-sen, which is trading at 1710, and then up to the top of the cloud at 1716, and then to the top of this zone that I've highlighted in yellow up to about 1728, 1730. Very strong zone of resistance. To the downside, we do have strong support at 1667, which was previous support and then previous resistance, so that's a very important area for this market. And then down to the Tenkan-sen, which is trading at 1662, and down to this important level around 1643, and it coincides with the bottom of the cloud. So we have mixed signals with this market, not really a market that you'd be trading in any medium-term time frame. We're getting mixed signals with neutral in the long term, bearish in the medium term, and bullish in the fast term. And the bulls are in the ascendancy in terms of the very short term, with the bears being in control. So a lot of conflicting signals in this market, where we still have a first time frame uptrend, and a market that could trade lower and test down to 1667.